Good morning, friends. So, I had a little sell side outlined, and at the open, we tore through it to the new week opening gap. The dollar is what I think is interesting. If you look at the dollar on the daily, we have come up back above this new week opening gap. So, in the coming days, we'll be looking to see this buy side taken, these highs, 1, 2, 3. I'm probably not going to trade today with Powell speaking at 4. I think any real move is going to be kind of suspended until then. If you look at the 15-minute, it's not like there's a clear, anything too clear. If we start to get below this new week opening gap, I might be interested, but I don't know. The move, I'm just holding off until GDP release. I think a lot of people are really waiting for that. I think if you, not that we really trade, what's the term for it? Like financials. I don't really trade financials, but I do think a lot of people are waiting on this GDP on Wall Street, because that's kind of what they're looking at in terms of like, are we going to see a recession? But we're green Monday, Tuesday, so we don't have to trade every day. You do not have to trade every day. If Powell was speaking earlier in the day, maybe I would try and do something after he spoke, but since it's right at 4, I'm gonna hold off, because I don't see us taking these lows before he speaks. And especially what happened right now, we just knocked out this sell side. So I think what might happen is we're going to come back down, play around in this new week opening gap. Another thing too is, if you can see how we've spent, especially in the 15-minute, we've spent this week around the new week opening gap. When the market does that, it's doing that, and it's likely to stay doing that until it shows a real willingness to want to break away. So you can see, like on this day right here, I'm looking at the 15-minute, kind of started to get away from it, came back down closer to it, and then we had this run up, but then that just turned into a wick, and we melted back down and retraced to it. So we're going to continue to just keep reverting back to this new week opening gap, I think, until these big news drivers are released. Again, you can see even on ES, it's more clear. We've just been hanging around inside this new week opening gap. No real willingness to want to leave it. We just swept sell side here. So especially if this starts to retrace up, that would be even more of a turn off for me. But I'm going to mark out some downside levels and see how far down it wants to go. I don't see us taking a new low before Powell and GDP gets released. I don't. It could. It could. But I'm gonna sit on my hands. And another thing too is my favorite days to trade are the days where you can see some kind of like clear liquidity the like 3 days prior, and what you do is you build a narrative around kind of running stops and reversing. And I mean, as you can see, the last 2 days have been all over the place. So there's no like clear levels of liquidity. I mean, we can mark out our swing highs and our swing lows that are levels of liquidity, but there's nothing like ooh, this would be a good setup. So far, made a little fair value gap there. So it looks like price structure, what we've done this morning is, here on the 5 minute, it's easy to see. We had London highs. So we had this high, this high, this high in London. And then around 8:30, we came up, we swept this buy side. And then kind of meandered lower. You can see we came up once, twice, broke on the 5 minute. We had a little market structure shift right here. Then it came back up. So this is kind of like a 2022 model right here. Came back down, came up, looks like it respected consequent encroachment of this up close candle. So it was an order block. You can see it right there. The body's respecting it very nicely. Love to see that. Then it broke lower and fell pretty hard at the 9:30 open. But yeah, so I think what it was doing, it was really running for this liquidity quickly. And I'd be curious to see how the rest of the day pans out, because I feel like sometimes when it does that, it like does it early at the open, and then it does nothing. And it does it early to kind of tease you. Yeah, you had a little entry right here on the 1 minute prior to taking these sell side levels. But I mean, as in terms of sell side, then like the next downside level you'd look for is like on the 15 minute, this wick consequent encroachment. I don't want to try and take a trade down to that. Maybe. We are on the bottom of the new week opening gap, so wouldn't mind it. Yeah, so GDP comes out 8:30 tomorrow, so I like that. It's in the morning, so we have the rest of the day for price to kind of not just be suspended waiting for it. I should probably just mark out these downside levels though, just in case. Sometimes I do still feel that feeling of like the need to trade. Like, the whole purpose we do this is to make money. So if there is a day where the stock market's open, then we should be trying to make money. I do still feel that, but it's at the point now in my trading where like there are just some days where it's so obvious. It's just so like the setup is so blatantly obvious and it's so easy. And then there's other days where it's not that obvious and not that easy. And then there's days where it's impossible, but it's almost like, well, if you just remove the impossible and hard days and just only wait for like the times when it's like, oh, this is clearly going to happen, or I've seen this before, then, I mean, for me, that was when it was like, oh, profitability. is in reach. It makes sense. So I kind of reiterate that to myself on days when it isn't too obvious. And like, yeah, we are like dropping pretty aggressively, but I don't know. I feel like any trade right now would simply just be off the basis of it looks like it's going lower and you're trying to ride a wave, which isn't really good trading. Yeah, so I don't think it's too much of seek and destroy. I'll edit that just for accuracy's sake, but still not too interested. ICT just posted a trade he took on Twitter, and it was like attacking, it was targeting this sell side, and it looked like he entered like somewhere in here on NQ, targeting that. I would have, if we didn't just drop at the open, I had some more time to like sit here and watch. A trade to this sell side would have been in my mind, but now that we've already ran two lows, I'd want more of a retracement. See our way down. Respecting that. I will stay on and try and find a silver bullet. I probably won't trade it. But watching price is good. Just some classic tape reading. You can see right here. I need just like a line, just not extended. There you go. Little volume imbalance respected. Right there. Came down. You can see on the 5 minute, we haven't really had any type of like PD array entry on the 5 minute, and it's all just kind of 1 minute stuff. When it's like that, I can get kind of, I don't want to say nervous, but you got to keep in your mind that like what's happening on the higher time frame too. You know, because you could enter right here, but look at the 5 minute. We have this 5 minute fair value gap that's right above it, and it could easily want to just tap up into that. And you don't see any, we don't really see any inefficiency on the 1 minute in that 5 minute fair value gap. But then, you know, you have to cycle through the time frames. Look at the 2. Okay, we have this inefficiency right here. It could go up to there, which is in that 5 minute. Go to the 3, another fair value gap right there. Could enter in on. So it's like, where would your stop be? You know, would it be at the top of this candle? Would it be at the top of this candle? Would it be at the top of this candle? What if it wants to revisit this volume imbalance? On the 4 minute, you have another fair value gap right here. Seems like this fair value gap lines up on like everything but the 1. So it's there on the 4. It's kind of there on the 3. It's there on the 2. So this is one of those instances where, you know, it could just respect this fair value gap and then go to this consequent encroachment, but you have to allow it a lot more room. You'd have to, and it's not a huge stop too. Like if you were to enter at the bottom, you'd have to, I'd say you'd have to have like your stop up here, like an 11-point stop, and then I'd still want to put it above that new week opening gap. have a little high-low, higher-high on the 5-minute and the 15-minute. Kind of like that. And something I like doing too when I'm just tape reading is like run through the hypothetical scenarios of like, if I entered here, what would I be feeling and thinking at this point right here? So it wouldn't have reached my target. I would have had this retracement. It would have been really close to my stop. The trade still makes sense. So kind of like thinking like what would be going through your mind. ICT tweeted, note Monday's daily discount wick consequent encroachment. So I'm guessing it's a wick somewhere in here. Let's see. Monday. Here is Monday. Monday's wick consequent encroachment. Boom. Yeah, look at that. I am going to miss him when he leaves. So, higher time frame, big wick on a Monday, consequent encroachment of that wick, consolidation around it. See, this is interesting. See, the body's all respected up until this one. This one opens, tick above with an aggressive drop. And remember these wicks, so this daily wick, he called out the consequent encroachment, but you know, you can really draw fib levels, and you know, this is his teaching, not mine. You can draw the fib levels on the wicks as well. And if you can see that 15-minute consequent encroachment we drew lines up nicely with that 75 level of that. It wasn't perfect, but it lines up pretty nicely. It's like a tick off, it looks like. But we're also looking on the daily time frame at a daily level. So think of the context. Yes, this is a daily wick consequent encroachment. It doesn't need to obey it right now. We could come down here, tap this, and it could do X, Y, and Z, and then close the day above that wick. Remember, if you're looking at this weekly or this daily level, keep in mind the daily narrative. Like, it could do that. It just has to do that today. And you can use it to give context to your lower time frame levels, but don't I wouldn't be like trying to go long right off this level just because the daily candle's there. Because that daily candle could do whatever it wanted and then close the day right above it. And it's like, there you go. It still worked. I think too, this order block structure, I think this looks like a pretty nice order block on the 15-minute, this down close candle. Took liquidity, also has a fair value gap. So I'd be interested to see what the mean threshold of that is. The mean threshold of that. The mean threshold of this order block. Okay, so it's that 50%. It's like right above the consequent encroachment. So you just got a lot of levels in here. If you want to just include the candle bodies, the candle's body. Yeah, there's a lot of interesting levels in here. Nothing that I see as a super likely target. It's a lot of things that I think are, could be points of reversal too. Notice how this wick just came up a little bit above the consequent encroachment of this fair value gap. You have these really flat highs right here. And two, I think it's really powerful to just be like, I don't see anything. Like maybe, I don't personally see anything. There could be some other people that are trading that see stuff. And it kind of lends into that fact of like not comparing yourself to others, because there can be somebody else that took this fair value gap and was like, oh, look at this candle, I just got this. And it's like, okay, well, like, first off, that could have been luck. Like, a lot of this can be luck. But if they lost, they wouldn't have showed that. A lot of people only show the wins. And it's like, yeah, like that worked out for them in the context of their knowledge and what they know. But that's like an isolated situation. Like if you don't see anything or you're not comfortable, then like just be comfortable with being like, I don't see anything. Like, because your trading is all in the context of your knowledge. So yeah, there are people that are out here probably trading this, and there are people that are making money. There's also people that are not losing, but you have to keep that in the context of what you know. Are you going to make money, or are you going to lose money? How confident are you that something's going to play out? Yeah, I have a feeling that today. So we had this move, and this was a nice move. This was tradable, I would say. Um, but again, I feel like I couldn't see us taking these lows, like genuinely taking them before Powell speaks or the GDP, and we're very close to them. And I could be wrong. We could come down, especially with everything that's going on in the Middle East. Like some headline could come out and boom, we're down. But I could also see a scenario where we just kind of melt back up to the new week opening gap. Again, GDP comes out in the morning on Thursday tomorrow, so I can trade Thursday and Friday. I traded Monday, Tuesday, like Wednesday. Just take a day off. You don't have to do it every day. Don't have to do it every day. Okay, so it is 10 o'clock. We are in the silver bullet time. We have yet to see a fair value gap deliver. Something I would like is if we came up aggressively and closed above this high. It'd be like on the smaller time frames, like even if you went to a 30-second time frame, that might look good. And I would just, you could find some entry, like maybe using this as an inversion. Closed above it, came back down, and then you just target back to this new week opening gap. Yeah. Got about 8.5 handles, almost 10 to that new week opening gap. That wouldn't be a bad trade idea. What I'm doing right now is kind of just building a scenario in my head. And I feel like when you do that prior to it playing out, it gives you a lot more confidence to actually take it and believe in that. So I would like it if we came down and like wicked below these lows on both NASDAQ and ES, and it was just a wick, and then after that wick it repriced aggressively above this high, closed above this high. It'd be nice if it was a fair value gap that was made through this fair value gap. So you have two overlapping ones, and then we would drop down into those, and that'd be a decent long, and your stop would just be, I guess it's not the smallest stop. It's not a tiny stop. I guess I should expand this a little more. So for example, you have a little fair value gap right here. It'd be 5 handles to that consequent encroachment. Could happen. Okay, so see right there? I like how that wick formed. We didn't really get it on NASDAQ. I actually don't like on NASDAQ how it's actually just made these perfectly equal lows. But that was an example of what I'd like to see. Just a hard wick, and then if it was to reprice aggressively. Since NASDAQ didn't, has these equal lows, I'm not gonna hold my breath on that scenario, but so why this high? Why would I want to see it close up above this high? Because this is the intermediate high, so it has a swing. It's a swing high with a swing low and a swing low on each side of it. So this is an intermediate term high. See what the dollar's doing. Dollar looks pretty sideways on the 5-minute chart. Oh, interesting. So this, I was about to say this is an SMT right here, but this candle, it's probably really hard to see for you, but the low of it is 14,605.25. The low on this candle is 14,605.5, so it actually went a tick below. So yeah, if we saw like an aggressive repricing and a close above this high, I could be interested in taking a buy up to the low of this new week opening gap. And because this is a swing high in the 5-minute, I like it when we take swing highs in the 5-minute. Yeah, but I mean, it's okay. So we focus on the silver bullet here. You don't start trading the silver bullet until 10. Look at this. You really want to trade that? Nothing. It could be nothing right now. Oh, thanks, Ben Spide. Yeah, so there's been nothing that could constitute a silver bullet, even in the first 23 minutes. And why I like that long idea is because we've already taken a lot of sell side and not really much buy side. So even if it was in like a seek and destroy like condition where it was just kind of, we're just in a big range, we're probably, you know, this is this low right here, the sell side low. This is our defined range low. So we're close to that. Haven't taken much buy side. We took on the 15 and the 5-minute, both of these sell sides. Haven't seen much for buy side. So I could see it like retracing and running just on like anybody who went short on the open. We also have this opening range gap. Almost overlooked that. And honestly, the longer it stays in this range like this, the more I like it. The idea of one, if it does aggressively reprice up above this high. Just because it seems like from what I've observed, this is like personally just me. When we do retrace to go lower, because the way the market goes down is low, high, down, up, down, up. So when we do retrace, and it is for the purpose of going lower, so in SMT or Smart Money Concepts theory, we're retracing together at a premium to sell at a discount, and it seems like that usually happens like decently quickly. Like, you know, this is an example actually right here of like a more drawn out version, but if you can see, you know, we're sideways, we go up, respect the inefficiency, then come down. But when we stay like sideways for this long, I feel like when it goes up, and especially if it's going up and then disrespecting inefficiencies, like bearish inefficiencies, that's when it's like, okay, we're not going up for an inefficiency to go lower. We're actually going up to reverse and run buy stops. For example, I kind of like what NQ is doing right here. So like if it came down and then up, I'd feel pretty good going long. So NQ kind of made a good break below these lows. ES kind of went even with it, but we'll see. Again, I'm not too interested in going short. So if this did just continue lower, I'll pass on that. Still though, nothing that's been a silver bullet. If NASDAQ was to come up and go above these highs, that would be a really classic setup. I'd like that. I'd trade it on ES probably, but it would look good on NASDAQ. It would be consolidation, manipulation below, engaging anybody who's trying to do a breakout to go short, and then it runs back up, going against their stops, and then continues to run against the buy side of anybody who's was short higher up and was in profitability. So see if we can see that play out right here. looked promising for a second. Looked promising. Let's see what the dollar's doing. Dollar looks like it's going lower, like that. Okay, I really want to see it above this fair value gap though. Again, we want to see it disrespect what would be a bearish inefficiency. So you have these two fair value gaps. I'd really want to see it close above these two. I just think that would be a safer entry. Because then you would have that shift in structure on the 5-minute as well. There's been times where I've gotten caught off sides because I didn't wait to see the shift in structure. Even on the high, I like it on the 5-minute too, because that gives me way more confidence. I mean, the dropping dollar, I think, is really tipping its hand to the direction, but there's been times where you see it kind of break out on the 1-minute and you get a little too caught up in the 1-minute and you'll try and go long. And then what it really was just, a retracement to then go lower. Like, yeah, this little fair value gap right there. I wouldn't enter that. I'd actually rather see that stay open. Still nothing though. Been no fair value gap that's delivered 5 handles. Well, okay, I guess I've been overlooking this candle right here, right at the 10 o'clock. This candle entered here and dropped. So I guess I was wrong. There has been one. I would count that. I would count that in technical terms, but aside from that, it's been jack shit. Well, looks like the bodies are going to respect this little fair value gap right here. Possibly. Again, I'm gonna wait for candle to go above this. See, I'm gonna look at NASDAQ real quick. Yeah, so ICT on Twitter called out the consequent encroachment of this wick, and NASDAQ, it looked like, respected it almost to the tick, pretty closely. So, to the tick. Yep, so you can see that's a significant point. We're moving away from it, so it's not like anything you'd want to try and short. We have the dollar continuing to drop lower. Looks like the dollar is actually making a low for the, not for the day, but the dollar is making a pretty significant low. I'd want to see a candle close above this high, above this fair value gap. And then maybe I'd be interested in trying to go long. I like that. I like it. It's showing a willingness. Okay, well. It's more than I wanted. This is what I wanted. The dollar dropping so aggressively. Let's see. Maybe buy one there. Put the stop right there. 24. It might not even go down to there though. That's a really conservative entry. Could just go like, let's see. Well, I guess I have to delete this now. I like how aggressively the dollar's dropping. where NQ bounced off of that consequent encroachment of the wick. We haven't taken buy stops in a while. Play it back to this new week opening gap. Again, this is just a real short-term scalp. If we come down to the tip of this candle right here, I'd want to see it come down to it and then move away from it. It would be an immediate rebalance on the 5-minute. This little annotation's kind of in the way, but I would, if we came down to this top of this candle, I'd want to see it touch it and move away. If we don't, that's also fine. Stop. It's going to be right below this candle, which is the third candle in this fair value gap. You gotta also be cautious though, because look, on the 15-minute, we just repriced into a 15-minute fair value gap. Again, it all depends on where the draw on liquidity is, on which PD arrays are respected. So that's why I'm going in one contract light on a demo. Just to kind of test out the waters, see where we're at. I do want this low to stay intact. Doesn't have to, but I want it to. I like this new week opening gap as a target. I like using the new week opening gaps as targets. I will be cautious of the consequent encroachment of this wick. I want to see it not respect it. I don't want that consequent encroachment to keep this price down. If it does, I will probably look into closing this position out. I want to see it move through it with some intention. So I'm probably going to move this to break even. Okay, like that. I like that. There we go. We're at. Should take our 5 handles. We'll put it at the new week opening gap. We're gonna remove the risk, take the risk off the trade, so we're right above break even. So if anything, we're walking away 0 on the day. We did get 5 handles. I've been kind of breaking that rule lately of not taking the first 5 handles. Not a great rule to break. Okay, fine. Let's see. We'll move it back. There we go. We listened to our rules. 5 handles. You could call this the silver bullet. I think this might be a little better. That was our little silver bullet for the day. But look, yeah. So, the plan is once we get this account out of drawdown and we're back on track, what I'll be doing is I'll be going in with more contracts. We'll take the first 5 handles. We'll then hold out for our next levels. But again, the purpose of this YouTube channel and the purpose of this account is I want it to be realistic trading. I want it to be realistic trading. And I want it to be trading where, because you can kind of get 5 handles just out of being lucky and like a price fluctuation. And in the beginning, that's all you need, but it's just like these base hits. Because, now we can highlight some upside levels. We can highlight this breaker. We can focus on the opening range gap. But, those are things that just over time, I can now start to gauge how realistic it is that we're going to get to them. But in the beginning days of trading, it's not that obvious to some people. So I don't want to start taking trades where it's like these 10 handle trades, and then it's just like, okay, well, that's not like the easiest thing that's not like what it realistically looks like in the beginning of your trading journey. So I want to emphasize on this channel, like, base hits. It's all about consistency. It's all about how many days can you go in there and actually understand what price is doing. So I outlined this whole scenario before it happened. Before it was like right at like 10:20, I kind of outlined this scenario. It was, if this happens, I will do this. Yeah, and I've said it before, I like using new week opening gaps as targets. I've always found that a lot of success with that. So I think it was really the combination of how NASDAQ printed this classic just consolidation, manipulation down, run up. We kind of did it on ES, but it didn't really make that low. The fact that we came up so aggressively, disrespected this fair value gap. I'm going to take this off to make it look cleaner. We turned around. Where did we turn around? We did this consolidation at a pretty significant level. It was on NASDAQ perfectly to the tick right here of the consequent encroachment of the daily candle of Monday. For us, you can see this consequent encroachment is right here. So it wasn't as exact. And again, I think that's one of the reasons why I think ICT is trading NASDAQ. NASDAQ does seem to be a little more precise. It came down to the tick, whereas ES didn't. But again, it doesn't matter. Trade whatever you're more comfortable. I've been trading ES all year, so I'm going to try and stick to that. Especially now that I'm doing this channel. But, you know, when you're reading the market as a whole. The market isn't just ES and it's not just NASDAQ. It's the culmination of the indices. So, you know, read them both to get a sense, because they're both going to go. They're both going to go in the same direction. And if they're not going in the same direction, then you shouldn't be trading, because that is also one of the principles of smart money concepts. You can see we came up here. We came up to the bottom of the new week opening gap, and then we retraced. I think we're still probably going to maybe see some higher price, or at least not lower prices, unless we take this low right here. So we could like come down, respect this fair value gap, and come back up. I'd say if we start closing candles below this fair value gap, we might see the sell side. But until that happens, it also could just stay in this range for the rest of the day. But yes, as for the account, we are really close to getting an auto drawdown, and I'm excited. I will make a video about that. I'm actually a little happy that when starting off this YouTube channel, it started off on a losing streak, because I think the way we've come back out of this losing streak is also it's a very healthy way. We didn't try and get a bunch of home runs, hit it out of the park. It's all, look at these base hits, 5 handles, little loss, 5 handles. So what's going to happen is, the plan is I will, as we start continuing these base hits and getting the account balance up, I'll start to scale up with more contracts. And that is a disciplined and safe way to do it. It's not, you know, you draw it down and then you start trading more size to fix it. I've done that in the past. It does not work, at least for me. Cool. I will maybe be on in the afternoon, depending on how price looks. I am also going to be, okay, I'll do a little, should I do a trade recap? I'm still trying to figure out how I want to structure this channel. Do I want to like recap the trade in the live video, or do I want to make another video after the fact? Today I'm gonna try and make another video after the fact. So I'm gonna log off. Enjoy your day.